All right, so welcome to another video. Today, what we're going to do is cover a couple of cool things when it comes to trading weekly options. So we're going to look at 3 ways to find weekly options to trade on your stocks or ETFs. So that'll be kind of the core presentation today. If you want to definitely get some insight on our stuff, live classes that I deal with, and some of the courses that we have available, I have one coming up soon. And maybe by the time you're watching this, we've already recorded, but there's always new classes coming out, such as market seasons, trading in different environments. We've done risk arrays, we've done covered call strategies, single option strategies, construction portfolio, ultimate adjustment. So there's a lot of classes. A lot of them are, 6 to 10 hours long, some are into 20 hours long. So definitely check those things out on our website. There's also a Discord channel that I have where I post some stuff on charts and technicals if you're really interested in getting some of the breakdown. But anyway, let's kick things off with looking at these different ways of how we can go ahead and actually set up some methods to going in and trading different weekly strategies. So as we look into the weekly strategies, I do want to let you know that, you got to make sure you're trading stocks that actually have weeklies. That's pretty important because you have liquidity right here. So look at all these weekly options. This is on the S&P. So with these, it's just a lot easier to trade them. You can see the expirations there are all over the place. You can pretty much trade Monday, Wednesday, Friday, and that's great. Even if you're dealing with stuff like, let's say Home Depot, there's just weekly options, so you can trade on the weeklies rather than just going in on the 30 days or monthly options. You can go 4, 11 days out, 18 days out, 25 days out. So you can kind of do a trade every single week if you like. And now a quick message from our sponsor. You don't have to spend hours analyzing stocks. Instead, you could use a tool like VectorVest to go ahead and give you the answers that you need about a stock very quickly. Their free stock analysis report gives you full fundamental and technical analysis in just seconds. So if you're interested in trying VectorVest, go ahead and visit vectorvest.com or check the link in the description below. So how do you go about finding these weekly strategies, or which ones do you trade? So I want to share with you some thoughts. These are kind of 3 ideas for you. There's many more ways to do it, but I just want to show you a starting point, right? And if you want to kind of work with me on your own personal strategy, that's where I deal with coaching sessions and one-on-one sessions. So you can definitely check that out on our website. But how do we start out with trading weekly strategies, and why might we want to do weekly strategies? Well, weekly strategies are basically there where you could go ahead and put a trade on Monday, and then this would expire, on Friday, Saturday. And then what you're looking to do is capitalize some of the premium. So you're looking to sell premium, just like an insurance company. So I'm looking to sell, let's say, verticals, or I'm looking to sell just the singles option contracts to be able to collect that money in premium. So that way I have money coming in every single week. Now, there is a risk when it comes to weekly, and that is the price risk. So you have the theta decays much faster, right? It's a fast decay, and that's probably why you're watching this video, is a fast decay. Get to make money every week. It's kind of quick, but the problem is you do have this extended price risk. So if you have a fast theta, there's something that you got to give, right? It's a give and get. You want to buy a camera, you got to pay up, right? You want to get a fast theta or time decay, you got more price risk. So that's the trade-off that you have in this kind of trading weeklies concept. It's just you don't have as much room or range as you do with a 20-day, 30-day, 50-day trade when you're doing those kinds of trades. So when I'm looking to set up some of these weeklies and looking to say, hey, I want to trade some of these weeklies, there's a few ways to go about it. So I'm going to go with number 1, give you one idea, and one way to start out with is we'll go ahead and look at here. The first one is going to be not 3 ways to find a weekly option strategy, but we're going to go ahead and look at watch for a trending moving average. Okay, so what you can do is put on a moving average on your stocks. Now, right now I have a 21-day moving average on here, and then I also have, let's say an 89 moving average. But what I'm looking for is, depending on your trade duration, this is 130 minutes, and rather than a 2-hour, it breaks down very evenly into the chart. So if we start looking at those and looking at the moving average and seeing, all we're looking for is this trend kind of going to the upside here, or are we going to the downside? So here I might trade a weekly to the downside for the stock price to sell off, because the moving average is actually pushing downward right here. Okay, whereas here it's sideways. You could do kind of iron condors if you like, or here you're starting to move to the upside. So somewhere over here you would go ahead and sell puts. So let's just talk about this for a second. So this stock right here just continues to kind of move to the upside. So first thing I want to do, there's a couple things I want to check. Number one is earnings. When is earnings? And if you don't have this software, this is TC2000. It's on our website, so you could check that out. So I want to first check if there's earnings. If there's not earnings in a little while, then I can go ahead and proceed further. The second thing I want to check is, do we even have weekly options? So STZ. Okay, so I'll check it out. And most of the ones I have do have weekly options because I scan it by that. So you can see we've got weekly options right here. So the next thing I want to check is kind of like, okay, are we trending to the upside? If that's the case, if that's how I want to trade it, then where do I want to be? Okay, so now I can start saying, hey, do I want to position over here, down here? And are we going to keep moving on the trend? Because I'm moving it and I'm choosing these based on the trend, right? It's trending and moving in that direction. So I kind of stick to the trend. So I can go into the 4-day options and now I can check the expected move, which is over here, 5 points or so, and that means 5 points up or down. So I could go about 5 points under that, so around 250. So I can go in right here, 250, and sell those premiums. And the premium, is that enough for me? It could be. It may not be. If it's not, move on to a different stock. If it is, feel free to sell it. So this is one way of going about it. So I could sell one, okay, and then I could buy one, let's say 10 points out or 5 points wide, depending on the strikes. And now I've got myself a vertical. So there we go. I've got a setup. Now, what you'll notice here is I'm looking to make a very tiny amount versus the risk that I have. So this is a little bit of the danger with these strategies. Weekly options, short duration, very tricky. So you want to be a little bit careful because look, you're making to make $67, but to make that $67, you're risking $933. Okay, trying to make 67. Now the chance of this working out in your favor, pretty good, but the one time it does go against you, you could be in big trouble. So if you're making about $67 each time, you probably don't want to lose more than 120, 150. Okay, so about 2 to 3 times the loss, and that just gives the probability a chance to kind of work in your favor. That stock might come down, wiggle around, go back up. So it can still touch that point, but still go back up and you could be fine. So we want to give the probability a chance to kind of work in our favor. Okay, so you could go ahead and put on something like this, and I'm just going to go ahead and put the trade on right there. And we'll go ahead and kind of work the order. And there it is. Now I've got a weekly trade. This trade expires in 4 days, as you can see, STZ, it's trending up. So we're going to see and let that time decay kind of work in our favor. So that's kind of method number 1. Okay, let's go ahead and take a look at method number 2. Okay, so method number 2 is looking at for overextended, which is sell into strength, and B, the contrarian. So I could go ahead and look at something like a stock that's too high. I could sell the calls, or a stock that went down too far, I could sell the puts, meaning it's going to probably go back up very soon. So I could do this in different ways because I'm looking for a change in that movement. So if we take that same stock that we have right now, the argument here is that this stock's already ran up very high. So what I could do is sell the upper band above it and say, hey, this stock probably won't go much further because it's already stretched. So I could try and sell something around, 265, around that range, and say, hey, we're already toppy. And if this pulls back in the next week, just a little bit, then that position can be very profitable. So this is a little bit of the contrarian view saying, hey, we've already went up and now chances are we'll pull back. If you look at other stocks, like let's say Facebook right here, we've been kind of pulling back down. Okay. So you could say, hey, it's already been going down for the last, let's say, month. Okay. So chances are it won't go as far anymore. So my contrarian view would say, hey, let's go ahead and put a put spread on because it's going to go ahead and pop higher. So that's the method and thinking behind it. So here at the 200 is what I'm watching. Again, check the earnings, 427. Are we going to have earnings this week in it? Nope, not this week. But we will have earnings soon because this is April 18th and I'll be avoiding earnings. And now what I'll do is, again, let's say I'm looking at this. I've got about a 9-point move that it could go down. Current price is 211. If it goes down about 9 or 10 points, we're at about 200. So if I can sell the 200, buy maybe 190 or 200, 195, do a vertical on it, So sell this one and buy the other one. And why do I buy the other leg? It's just so that way I'm protected. If you do it naked without that protection, you're going to use a lot more capital. Okay, now I'll analyze that trade for you. And here we go. We've got a spread where we're risking about $451 to be able to make 49, but I could go ahead and sell 2 of these. So now I'm risking about $900 to make about $100. So it's about 10% in a week. And again, now if I'm trying to make 100, 100, 100 each time on these types of trades, I probably don't want to lose more than $200 or $300. So now what I can do is say, hey, I'm a contrarian. Stock's already pulled back for the last couple of weeks. Probably will pop a little higher sometime soon. So I'll go ahead, send that in, and I'll push that order through. And we'll let that sit and kind of work that order and see if we can get filled. So there's our Facebook trade. And there's a few red notes here that say, hey, the earnings are here. Watch out, but we'll be out of that trade beforehand. So let's go ahead and try and push that order a little bit faster. Let's go to 48 cents. And then we'll send that in and see if we can get filled. And there we go. We got filled. So now we've got this contrarian view thinking it's going to pop because the last couple of weeks we've been kind of moving down. So we're already stretched on the downside. We're looking for a little pop. And if that happens, then we should be okay. All right. So those are a couple of methods. That's 2 so far. I'm going to show you the third one here. And the third method is staying consistent on the same stock. So a lot of people think this is a little weird, but let's just say you're into trading Home Depot here. And you want to go ahead and sell weekly puts on it every single week. Now you might say, in these cases, if I sell a weekly put for a long investment, right here, you would have got burned. So that's a loss. Again, you sell some more. This could have been a loss. Third time you sell, this could have been, again, a loss. Here, this could have been a win because you got this. Fourth time, loss. So what you're doing here is you think, okay, well, if I'm selling weekly puts and I'm trying to overtime it, you know, a lot of people try to time it based on the trend that we've talked about earlier or the direction or be the contrarian. That could be a little bit more favorable if you're more technical. But even if you're not technical on the charts, as long as you're doing things consistent, but you're doing it across multiple months, you need to be able to sustain enough losers and winners to be able to handle 20 to 50 occurrences. So here you can see I've got a loss, 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 W, loss. So I've got almost 3, 4, 5, let's just call it 6 losers, maybe 2 winners out of there, depending on the weeks that happen. But if you start backing this up to multiple years, and we start looking at something like this, where here I might this week lose. Well, this one right here, maybe, oh, this one's a win. This is a lose. So I've got a lot of losers. And now here, as we start going up, there's a winner. So combining all this, actually, I've got a ton of winners over here, quite a handful of losers over here. But I need to be able to stick to the same vehicle, because if you stick to the same vehicle, eventually that stock will probably turn around. I doubt that Home Depot is going to go to 0. So we're looking for that turnaround. And that's when, if we stay consistent, we'll be able to see the results actually come in and be favorable. And you might, throughout some time, have a few losers even on those. Okay, so you'll still have some losers, but throughout the other spots, you'll have quite a few winning zones as you continue to follow and work that same trend or the same stock chart. So being consistent on the same exact vehicle or the same exact ETF, you know, that's where you can really shine if you're able to do the same thing over and over again. And it's no different as, hey, if you're making, let's say, $200 on each put vertical that you're selling, then what you can do is, hey, I just don't want to lose more than maybe 600 each time. So maybe 2 to 3 times the loss. So that'd be between 400 and about $600 max loss. So this way you're not blowing up that loss to maybe minus 1,500, because you will have a total max risk at higher than, you know, the credit you're receiving. And if you need to get out of it early, you'll need to pull that trigger. So that's a little bit of the difference and problem. But in this case, you're just staying consistent with it. You're not picking a specific trend based on moving averages. You're not picking a specific trend based on being contrarian. You're just doing it consistent on the same stock. It's usually a lot easier for many people to just go ahead and do that rather than trying to overtime it. It's just that maybe, let's say things are not working out in your favor during certain conditions. Let's say you start getting into a losing streak. Even if you didn't look at the charts, you kind of realize, hey, I've got 4 to 5 losers that happen. Maybe instead of doing 3 contracts each time, okay, you might say, I'll only do 1 contract. So if you normally trade 3 contracts, go to 1. Or, you know, if you normally do 1 contract every week, why don't you go with 1 contract every 2 weeks? So kind of slow it down to wait until you start winning some again. So that way the stock chart or the price starts getting back into your favor. It just lengthens that duration or kind of compresses the time frame or the amount of numbers that you're in over and over again. You're kind of waiting for the conditions to reset up back in your favor. So I hope that kind of makes sense. Those are kind of 3 main ways that you could go about setting up some weekly trades and finding some weekly trades to put on option trades, whether you're selling vertical options from a put side or you're selling verticals calls. It's no different. So what you're trying to do is just either work it with the trend, against the trend, or doing things in the same way. So anyways, as for moving averages, just pick out one that makes sense for you. That, hey, if you like the 21 day and you want to go to like 130 minute, then just see how is it moving. Is it trending down or is it trending up? Are we overextended? From an extension standpoint, you could use Bollinger Bands, you could use other things from Fibonacci levels, and seeing how far down that stock is, whether it's down or up. We could be extended to the upside or the downside. And then make your choice and be consistent with your strategy. And if all those things line up, things should pan out just fine for you in the long run. But it's not just about 2 or 3 trades. It's about doing 50, 100, 200 trades and keep working the system and trade that you have. Anyways, I hope that helps. Thank you so much for joining me. Truly appreciate you sticking with me. Enjoy the rest of the week ahead, and I will see you in the next video and episode.